Ever heard of a short squeeze? It's one of the scariest things that can happen to a hedge fund and one of the most profitable opportunities for regular investors. The short squeeze was made famous in 2020 when Redditors piled into GameStop. The stock soared 9,800% in a couple of months, turning a $5,000 investment into nearly $500,000. But believe it or not, GameStop was not a one-off event. Short squeezes take place all the time. They may not all go up 100-fold, but 300 to 500% moves are quite common. Today, I'm going to show you how and why they work. I'm also going to share 3 stocks setting up in potential short squeezes that could deliver huge gains. These are stocks with that perfect combination of a lot of the shares sold short and a stock price that keeps on making new highs. Now, a lot of people don't realize you can make money when stocks go down. The process is known as short selling. Here's billionaire hedge fund manager Bill Ackman explaining how it works.
Imagine for a moment that a friend of yours collects rare coins, and you have the view that those coins are going to go down in value. So the way you would short those coins is you call up your friend and say, "Can I borrow a few of your coins?" And he says, "Sure." And you borrow the coins. You then sell them for the $1,000 each that they sell for in the market at the time. And then you wait for them to drop in value. And you turned out to be right, and the coins dropped in value to $500. You go back into the market, you buy them back for $500. You've sold them for $1,000. You've repurchased them for $500. You've made $500 on each coin. And then you return the coins to your friend. Your friend is in the same place he was when he started, and he has the same coins that he started with. You might have to actually pay him something for borrowing the coins because he loaned them to you. You might pay him an interest rate. So he's happy because he's made an interest rate. He's made interest lending you the coins. You've made money profiting from the decline in the value of the coins, and that's short selling. That's when it works.
When it works. But what about when it doesn't work? What if you sell it and the stock goes higher? Because the stock can go infinitely higher. You could lose 3, 4, 5, 100 times more than your initial investment. In 2020, the hedge fund Melvin Capital shorted 50 million shares of GameStop at a price of around $1 a share. They were betting the company would declare bankruptcy and go to zero, which was the general consensus at the time. So a bunch of retail investors on a Reddit board, Wall Street Bets, devised a plan. If they pooled their money and all bought the stock, they could drive it higher. If the stock rose from $1 to $2, Melvin Capital would lose $50 million. They pushed it all the way up to $5. The hedge fund's $50 million short bet quickly turned into a $200 million loss. And this is when things got interesting. Because in order to get out and cut their losses, they would have to buy. With a traditional stock investment, you buy to enter the trade and sell to exit. But with a short, you sell to enter and buy to exit. This would add more fuel to the fire, bring even more buying volume, and send GameStop stock even higher. So instead, they doubled down. They kept selling while the public kept buying. And their hubris eventually cost them a $2 billion loss. But this is a short squeeze. It's why selling short is risky. Now, it doesn't always work out this way. Most stocks being sold short are terrible stocks. There is a reason hedge funds are betting against them. Groupon, for example, has a 44% short interest. I didn't even know they still existed. But every once in a while, these funds get it wrong. And when they do, Wall Street loses. And savvy retail investors can hit it big. Take Lulu's Fashion Lounge, for example, ticker LVLU. Last month, the stock's short interest, the percentage of its shares being held short, hit 42%. Investors were betting big that this stock was a dog. But on January 12th, that all changed. News broke that the investment firm Friedland Enterprises had taken a 5% stake in the company and was working to turn it around. Investors piled in. At the same time, short sellers ran for the exits. And this combination of heavy buying from investors getting in and heavy buying from short sellers trying to get out caused a massive spike in Lulu stock. Shares skyrocketed from $6 to $32 in just over a week. It was a perfect short squeeze. And traders who were paying attention were able to quickly quadruple their money. Now, all of this is publicly available, by the way. You can see which stocks have high short interest. StockAnalysis.com has a most shorted stocks list. There's other sites like highshortinterest.com. I like to look for small to medium-sized companies with small floats. So all things being equal, the fewer outstanding shares a company has, the more effective a short squeeze is going to be. Now, the big software stocks, they're getting hammered right now, and hedge funds are beginning to short them, but for good reason. Last month, Anthropic released an upgrade to its AI model, Claude. Claude gained industry-specific plugins and the ability to coordinate teams of autonomous AI agents. Translation: why pay $50,000 a year for enterprise software when a $20 a month AI assistant can do most of the work? And the response has been full-on panic. Microsoft lost more than a quarter of its value. Oracle got obliterated. While the S&P 500 sits within 1% of all-time highs, the software sector has collapsed. Now, by the way, if you're sitting there thinking, okay, cool, but how do I actually take advantage of this? That's exactly why I started my Black Ops trading service. For just $5 a year, you get direct access to me in our live weekly training sessions, where I walk you through where the opportunities are, what I'm buying, and you'll learn how to spot these in real time. I take all your questions, even review your stock, so click the link in the description, scan the QR code, or go to tradewithross.com to sign up. It's just $5 for the whole year. Trust me, it's worth every penny. But what we are seeing today are essentially the first real-world effects of AI. Artificial intelligence is looking at the software as a service business model and saying, I can do this cheaper, faster, and I don't take lunch breaks. So hedge funds are betting against them at record levels. Now, in this case, I think it's for good reason. The market is priced in perfection for the tech sector, and a lot of these companies need to be brought down to reality. So this is not a good place to look for short squeezes. Plus, these are $100 billion companies. It would take an enormous amount of capital to punish these short sellers in any meaningful way. Instead, here are 3 stocks that could do very well. Each has high short interest, a relatively small float, and a stock price near its highs. Number 1, Solaris Energy Infrastructure, ticker SEI. Solaris provides industrial-grade, rapidly deployable power generation. Their biggest clients, data centers. As these data centers continue to put a strain on the local power grid, Solaris offers a quick solution to keep them running. They are perfectly positioned for the AI energy bottleneck. SEI stock has been surging. It's up 600% in 2 years, currently trades around $54 a share. Yet despite this, nearly 32% of Solaris Energy stock is held short. But the bears cannot take the pain forever. As they abandon their cause, expect the stock to rise even further. Stock number 2, TeraWulf, ticker WULF. TeraWulf develops, owns, and operates vertically integrated, environmentally sustainable data centers designed specifically for high-performance computing. That is their fancy way of saying, we mine Bitcoin. Now, this is a bit of a controversial pick, given Bitcoin's 50% decline over the last 4 months, but TeraWulf stock has been almost completely unaffected. Heck, yesterday it made a new multi-year high. Now, I actually predicted this decline in Bitcoin a few months ago, so this is my I told you so to the naysayers in the comments section who told me how wrong I was. But regardless, this is a pretty rational place for Bitcoin to bounce, and if it starts to rally from here, it will add even more buying pressure to the stock and trigger a powerful short squeeze higher. The company reports earnings on the 26th, which could be a catalyst that starts that move. Finally, there's Tango Therapeutics, ticker TNGX, whose short interest has surged to a whopping 55.2%. Now, this is a biotech company, something I know absolutely nothing about. But I do know how to read a stock chart. This sucker is going straight up. With a float of just 60 million shares and more than half of these held short, this thing could unwind in record fashion. Now, biotechs move fast, so keep this one on your watch list and look to buy on any meaningful move higher. Look, if you got something out of today's video, will you do me a favor? Hit the heart there, like this video, and be sure to subscribe to the channel. Also, don't forget to sign up for my Black Ops membership. It's just $5 for the whole year. We will review these opportunities together in our 1-hour live members-only sessions every week. You'll also get my newsletter, bonus report, and a bunch more. So scan the QR code in the corner, click the link in the description, or go to tradewithross.com to sign up.